So we have a very big week ahead in the markets. We have not only CPI on Wednesday, but also the Fed minutes on Thursday. And then on top of that, if you remember from the previous video, I do have a reversal date time range between Tuesday and Wednesday of this week. Ideally will spark a downside move. Most likely CPI would be the catalyst of this to a move to the downside. And part of the reason why I believe this will be the case, I guess just some of the variables I'm looking at, one being Apple right here. Apple, obviously the largest holding in the S&P 500 as well as the Nasdaq. We are back on this critical trend line. Every single time we touch this trend line, again, history doesn't have to repeat itself, but every single time we've touched this trend line, it has prompted a major high in the S&P 500 that has resulted in new lows afterwards. Now, I'm not predicting here that Apple is going to see new lows, but we do know that this is a hard rejection spot, specifically for Apple. And of course, when Apple sells off, we do see the rest of the market tend to follow. So we do know that this is a hard rejection spot. We've seen it happen previously before. We saw end of March, a sell-off from there. We saw middle of August, a sell-off from there. And now we are back to this level. And remember, both these times, middle of August and end of March, both in 2022, this was the top for the S&P 500 right around this time range. So Apple touching this trend line marked the top of that move before continuing down to reach new lows both of these times. So again, this is a good short risk reward spot at the very least in terms of Apple, but also this has potential consequences for the S&P 500 and just the market as a whole because Apple is in a spot where it could possibly sell off yet again. Now, one thing I'd like to point out with that is QQQ. So Nasdaq here, we did see a breakout previously in the past week of this ascending pattern. However, it has been a weak breakout thus far. We haven't seen kind of like the aggressive upside price action that we had seen in previous weeks, like we saw from this past breakout over here of this bull flag. This broke out to the upside, then we saw consolidation and then continuation up. But so far, we've had a retest of this ascending pattern, this yellow trend line to be specific. I want you guys to watch this weekly candle specifically, what happens on the close. In the month of April, I'm expecting some form of a close back within the previous ascending pattern, which would mean that all of this so far is a fake breakout or would be a fake breakout. So if you guys are subscribed to the channel, you know what a fake breakout means. It means that we have to revert back to the lower end of whatever previous channel, ascending pattern, etc. we were in, which would mean we'd have to go all the way back down to about 300 and retest this trend line, which possibly could warrant even more downside after breaking the trend line, but at the very least would mean we'd have to retest this trend line if we had a breakdown back below. So far, it is a successful retest. We saw a bounce on Friday, but again, with a lot of potential volatile catalysts for this week, such as CPI and the Fed minutes, be careful of where the weekly closes at the end of this week on Friday, specifically if it closes back within this previous ascending pattern, because that again would be a fake breakout, kind of similar to what we saw back here on the February 2nd high. This was a fake breakout of the previous trend line that we had been within, and we had to revert all the way back down to form this lower end of the pivot. So again, when you see these fake breakouts, that typically is a bearish occurrence that will have an impact on price, and a substantial impact at that, because we did see a sell-off, a pretty generous sell-off here afterwards after this fake breakout. So just keep that in mind. Again, it hasn't happened yet, but this is something that I'm watching for specifically within the month of April. So just wanted to alert you guys of that. But something else I want to look at as well is the SPY flow, specifically from Friday. We saw 3.4 million in premium at the 389 strike. This is pretty far out the money. Also for the 6/16 expiration, so that June expiration, only within about 2 months. And then we saw some over weekend hedging. Remember, we did have a long weekend with Friday off for the 1.1 million in premium at the 407 strike. So this is a little bit closer to the money, but this person likely hedging for the long weekend because they chose the 411 expiration. And then if you go down to the morning session, you can see here we saw 1.1 million in premium at the 390 strike. Again, another May expiration. We've seen a lot of May, June, and now starting to see some July expirations in puts. This has been characteristic pretty much throughout the entirety of this chop between February and now. We've seen a lot of the May, June, and some of the July, like I just said, expirations hitting the tape, and this has been pretty consistent all the way down. We haven't really been seeing them roll, at least the whales roll back to the August, September, and October expirations yet. So they're still fairly consistent with the expirations they've been choosing for the past couple months now. And then also a pretty big print over here for 4.5 million in premium, again at the 390 strike, pretty far out the money considering they got this at 406.31 as the spot price. And again, 519 expiration, so that May 19th expiration only only about a month and a half-ish time period before that expires. So they are expecting some form of a rejection here, likely this week or next week at the latest. So just an update on flow. If you go to the historical flow tab here and just filter for the entirety of the past week, you can see here, and of course I always like to filter for above 1 million in premium to see what whales are doing. But you can see a lot of those super deep in the money punts. I'm not as interested in those, like the 700 strike, 465 strike. I'm not as interested in those. That's part of an arbitrage trade strategy. But you can see here 5.4 million in premium for the 395. So again, we're seeing a lot of these, whether it be the 389 strike that we saw or the 390 strike like I just showed you on Friday. Again, another 395. So a lot of these within the 390-ish range, or at least the lower end of the 390s for this strike. Same thing if you go to the earlier portion of the week, 400 strike, 395 strike, 405 strike. So again, still very put heavy, skewed to the put side, a 97% put flow to 3% call flow if you filter for that over 1 million in premium just for last week overall. So again, still a lot of puts in the tape, more so than we saw at the end of March. So it seems like whales are predicting some form of a down leg will occur. Obviously, you don't want to just base your assessment off of flow, but it's still a very useful variable nonetheless. So I wanted to give you guys an update on that. And of course, I always give you guys an update on the dark pool levels feature here. We did not see, this is one of the things that I have been watching for and something that I also alerted you guys on as well. I wanted to see forms of dark pool distribution, especially in the past week. And unfortunately, we didn't see that much premium overall. We saw 723 million in premium at the 407.76 level. Again, anything under a billion, just not really that much in the grand scheme of things. If you go back to Wednesday, you can see here we only had 932 million. Actually, I just want to make a correction for myself. I did mention the flow in the previous segment here of being on Friday. That put flow that we saw, it actually was Thursday. Remember, Friday was off. I even said it in the beginning of the video, but I ended up forgetting about that. So that was for Thursday, all of the put flow that I was showing you. We'll put a correction display on the screen, but I just wanted to make sure I get that clarification off because last week was only 4 days of trading. But nevertheless, on Wednesday, we saw here 932 million. Again, didn't make it over the billion level in terms of overall premium. Same thing just the rest of the week. Tuesday, 938 million. Again, not that much. I'd like to see multiple billions to show some form of distribution in terms of selling. And then 513 million on Monday at the 410.99 level. So we haven't really been seeing those large sell blocks, at least via the dark pools, kind of like we saw back around this time period. Remember, we saw above 3 billion in premium twice around the top range here, at least on SPY. And I'll actually go over to just SPX's chart here really quick, but we saw signs of dark pool distribution up here. Last time SPX was around the 4,150 to just below a 4,200-ish range. We saw those large prints occur and then some consolidation after, and I was talking about this being a possible distribution, ended up selling off, and then we saw those large prints over here for the retest for that accumulation phase, which has now prompted a bounce. So again, I'd like to see forms of distribution yet again around this range, especially as we are nearing the upside of this pennant, which is the two yellow trend lines that you can see here, as well as this head and shoulders pattern. We have the left shoulder, the head, and the right shoulder. And then of course, as I shared in the last video, if you watched at least to the middle of it, my 37-day cycle, which I'll share here again, every 37 trading days, we tend to have a reversal to the opposite direction of wherever momentum was trending into that date. For example, all the way back here around the end of December, it ended up marking the low within plus or minus 1 day of the exact low. Over here, February 15th was the exact start of this down leg back to retest the lower end of the trend line. And you can see just scrolling all the way back to previous dates, this marked the quick short covering rally to the upside for 4 days before it ended up falling lower. So it's a very good marker of reversal dates. And again, one more over here, the May 20th reversal marked the low before going to the upside. So again, very good marker of reversal dates. This is one of 3 cycles that I have that converge between the Tuesday and Wednesday time period. So it's definitely a time period you want to watch for, especially if we see upwards / chop price action starting on Monday into Tuesday, because that would make it very likely that CPI would be a downside catalyst. It's very difficult to predict the exact price action that you see after CPI is released, because a lot of other variables beyond just cycles can play into that. But I would argue that there's a higher probability, again, if we see upwards / chop price action into Wednesday, that CPI would be a catalyst for further downside in the market. So just keep that in mind as we go into the week. And one last thing I'd like to mention here is IWM's price action from last week. We saw a lot more strength heading into the end of the week in Nasdaq. Nasdaq, the Dow Jones, as well as the S&P 500. However, on IWM, we saw barely any strength. It barely closed green on the day. And part of the reason why this was the case was this hard rejection off of the retest of this trend line here. If you scroll back on the daily chart here, all the way down to the COVID low, you can connect this as a key pivot to the low that we made around the September to October time period. And this also connects to the low we made in the middle of December / end of December. You can see here we did fall under this in the middle of March, and ever since then we have been unable to reclaim back above. This is actually very bearish that it's been unable to reclaim above. It's retested this trend line multiple times now, and bulls have been unable to clear back above to continue to the upside. So this is actually very bearish so far that it broke below this trend line. This is also a form of a previous pennant because of this top trend line from up here. So this is something that I'm watching very carefully, because remember, the markets will all weigh on each other, especially if one is weaker than the rest. They can weigh on the other indexes, and IWM is looking fairly bearish overall. Again, this could be a signal of potential weakness for the rest of the market as well because of this breakdown below. So continue to watch this trend line here connected to the 2020 low pivot all the way up to these other pivot points that we made key lows, whether it be December as well as September / October. But keep this in mind. This is definitely something that caught my eye and could weigh on the overall market. But other than that, though, looking forward to this week. A lot of events are taking place, should be very exciting, and I will see you guys next time on Wednesday.